There's no hiding that President Joe Biden is really someone who is in favor of raising taxes. So in this video, I'm going to talk about how Joe Biden's new proposed tax plan can affect you as a real estate investor, real estate agent, or someone who's looking to get into real estate, or maybe you're just buying your first investment property or your next investment property. And what are some things you could do to go about this so you can come out on top? For those of you who don't know me, my name is Raul Balufe. I'm a real estate wholesaler. We have an operation here out of South Florida, team of about 20 people, and we wholesale about 100 houses a year. We do fix and flips on about 10 to 20 houses a year and have a nice little rental portfolio and now building up some Airbnbs. So in this video, I'm going to go over a tax plan or a tax plan for Biden's tax plan and my interpretation of it. I'm not a tax expert by any means, but this is my interpretation of how you can use it in a business sense. So I have some notes here and I'm going to read some of the things that I have, some facts, and then I'm going to give a little interpretation of it because there's a lot of changes going on right now. So I want you to be aware. So if you make over $400,000 a year, this seems like this is the area where Biden is really focused on increasing taxes. So currently being taxed, if you earn $400,000 a year, is about 37%. And that is going to go up to 39.6%. So it doesn't seem like a lot, but if you're earning $600,000, $700,000, $800,000 a year, that extra 2.6% could equal in the tens of thousands of dollars. So it's definitely something to keep an eye out on. Second, if you are earning $400,000 a year or more, Biden's new proposed tax law is he would like to increase your Social Security tax on your pay stubs. So if you're getting pay stubs, or if you're doing it would have to be some kind of W-2 form of income. This is how I understand it. He will then be raising the Social Security. I couldn't understand really on the research I did, what are the exact numbers or what are the implications for you, but it's definitely something to be aware of. If you're a business owner, if maybe you're working a really high-end job and you're making a lot of money, if you're paying yourself W-2, if you have the ability to earn less than $400,000 a year on a W-2 and then maybe the rest in a distribution, might be something worth asking your accountant for their advice. And lastly, my least favorite Biden's tax plan is he wants to tax long-term capital gains if you make $400,000 or more again. So he's really targeting the $400,000 or more a year earner. So really the lower end, lower than that lower pay grade than that is not really getting affected too much. But he wants to tax long-term capital gain, which is usually around 20% to 39.6%. So just as ordinary income. What does this mean for you? Well, it benefits us to hold a real estate asset, hold a rental property for more than a year. Because if you buy property and flip it within 6 months, 7 months, 3 months, anything before a year, you typically get taxed at the highest rate, 30, 35, 40%, really depending on what you're doing, where you're at. But the law was if you hold a property for over a year, then you get taxed way less, typically somewhere between 15 to 20%, depending on where you're at in your tax bracket and everything. But now he wants to treat that as ordinary income, making it not favorable to hold properties over a year. In my opinion, this is a bad move. Okay, this is incentivizing investors to not hold properties and just to let them go and let them keep transferring hands. And I understand on the government perspective how they can earn more money on tax stamps and for counties and things like this, but it's really just a bad move in the macro. Now, what does this mean for you, and why am I even bringing this up on this video? And if Biden's watching this, I know you're not watching this, Biden, but if Biden's watching this, I would say, hey man, talk to some more local experts, because this sounds crazy to me. Why would you even think about it? Anyways, no politics. So what does this mean for you? Well, I would say you have to control your destiny, because today it's Biden, tomorrow it's Trump, maybe the next day is Sally, and the next day is this, and the next day is that. It doesn't freaking matter who's in the office, who's in presidency. You have to control your own game, okay? You can't be thinking about how to play Biden's game or Trump's game, although to an extent you have to learn how to play the tax game, but you have to be in the game. What do I mean by that? When it comes to real estate, what I would consider if I was you, what I'm doing in my personal portfolio is I'm keeping more rentals, because there still is a tax benefit to rentals so far. There's a lot of tax benefits to keeping properties. There's a lot of tax benefit to having good loans and the interest and things you can write off. I would consult with your accountant or watch YouTube videos about this. Make as much money as you can, invest as much as you can, to your own abilities, in real estate or in assets that you get taxable deductions or tax credits from. And real estate is still one of the best asset classes in the world ever to do this. And it doesn't matter who's in office. That's going to be my plan coming up. We're definitely keeping more rentals. We're doing this strategy called cost segregation. And to not go off on a tangent here, and it'll kind of tie back to the tax plan, cost segregation is really just the process of buying a rental property, and then instead of getting the depreciation over 27 and a half years for a single family home, you can get it in year one, doing a cost segregation study. So just to give you some numbers, on 4 of my single family home rentals that are not over 500 grand each, probably the average I would say is about $400,000 of value each. So 4 houses of 400 grand of value that I have as rentals. It's not even my full portfolio, it's just some of it. I send it in to get a cost segregation study, and I will be getting about a tax benefit of over $100,000. So 6 figures of tax benefit 1 year with just 4 properties. So it is a very powerful thing. And that is one of the strategies I'm deploying a lot this year, to be able to, no matter what Biden's tax plan is, I'm going to have a plan for it. And I'm going to play my own game to make sure that I play that game correctly. So again, I'm not a tax strategist at all. Please consult with an attorney, accountant, an advisor, whoever you want to talk to. I'm just a real estate dude that knows how to make a lot of money with wholesaling houses. And I would love to teach you the same on a free channel like this. And if you have any questions, please feel free to comment below. If you want to find me, you want to learn more, check out robolufo.com. If you click on the download now button on robolufo.com, I will send you my free contract, a script, a spreadsheet, and one other gift. I can't remember, but you'll get it for free. There's no credit cards or anything. It'll email it right to you. So if you want to check out that, you can go over to robolufo.com or check out my podcast, Flipping Miami. And I'll see you guys on the next video. Peace.